All right, so trading gold, um, purely gold. Recently, gold has been skyrocketing, right? For the past 1, 2, 3, 4 days, price has hit an all-time high. For the past one, no, 1, 2, 3, 4, 5 weeks, price has hit an all-time high. Um, Price almost hit an all-time high again today or yesterday on Friday. Look at the DXY. Price has basically flatted out here. Um, just unable to push up and unable to push down. Really, the U.S. dollar just isn't that strong right now. If you look at like the year or even the 6 month, like gold has pushed up over 1,300. No, 13,000. I'm pretty sure 13,000 pips in the past year. Pretty sure it's 13,000 or 1,300, either or. Still astonishing numbers. I mean, to think at the beginning of the year gold was at 2,600 is insane. So the week started off. Let's see right here. I was in buys for gold already because I just had the buys prices pushing up. Buys from here. This Fibonacci here. Bought up once I saw this strong candlestick, like off the open price match this basically just down, or this bearish candlestick, and push up, closed here, but kind of made a tweezer. I wouldn't say a tweezer bottom, but we were at the moving average, this area 38.2, was in buy, saw this strong push up, another followed by another push up. Just knew that price was going to continue pushing up, so I moved my TP, I think, a little bit higher to this area. Price got here, continued pushing up. You could find several entries here. Price pushes up above this area, retest it, pushes up, clears this area, enter again. And again, we're at all-time highs at this point, so yeah, I gotta keep that in mind and be conservative. So you wouldn't want to risk a lot because we're at all-time highs. So you see this, enter something like this, probably enter here for a trade like this or something. But you would be you'd be very like wary. I don't think I was actually in this trade here. I was holding a very long-term trade, I'm pretty sure, from here, but I think once I saw it get here, no, this was at 2 a.m. I wasn't in this trade. But this is a trade I would have entered if I saw it. I would have, no, I don't think I would have entered this trade. Yeah, it was at 2. I wouldn't have been on the charts at this time. Price came all the way down here. I did enter this trade, however. I was looking for sells, but once I saw price get here and start to push up and create higher lows, I did enter with my stop loss TP at, I'm pretty sure, this area, the 3,900. I was just holding that trade, and I had another short-term trade to this key level. Price kept pushing up and create a structure here. So I had this box from here when price was coming down, had this box, anticipated price pushing back up to the 3,900. I entered here, got stopped out once with this candlestick here, but I entered again, and no, I didn't enter before. I entered here, and I got stopped out because price didn't hit this area. No, I exited the trade. I exited manually here because price wicked all the way up but wasn't able to tap it. with that closure, I'm like, bro, it's not hitting that area. Um, okay. It's honestly my fault. Knowing that price is trading at all-time highs, like, it's very risky. It's inherently risky, but it's even more risky the fact that price is at all-time highs. So, I should have traded according to structure. I was trading to what I wanted price to go to, which was higher, but I need to trade according to market structure, which is price got here and then dropped down. So I know if price is pushing up, it's at least gonna get here. I don't know anything, but I'm anticipating if price is pushing up, it's at least gonna get there. You know, at least if it's gonna break structure, it has to break that point. You know, if it's not gonna break structure, could have stopped here then push down. But here's basically the safest TP I could have for that trade. I entered on the 15-minute, boom. I think I would have entered on the hourly because the 15 minutes is a little confusing. Probably entered right here. Not the best risk to reward, but it's, it's a good trade. So, but I entered, I think, or something like this and just exited here. Didn't trade the downtrend. This huge drop, didn't trade that. I entered here again, all the way up here, and I entered where was it? I entered here. Here I entered with the TP up here. I exited both of those trades, however, because I'm like, yeah, I just saw price stalling out here again, like at this area. Honestly, I made a lot of mistakes this week. Could have left very profitable, but I did make mistakes of entering and exiting a lot. Entering and exiting a lot, especially considering the fact that I had a bias that price was pushing up. I mean, we know the federal government shut down, so that's like a lot of uncertainty for the U.S. dollar. I mean, any normal U.S. citizen would be like, "Dang, what's happening?" I don't really want my money in the U.S. dollar right now if the federal government's shutting down. Like NFP is not coming out, stuff like that. So I just need to just stick with my bias. If I see price pushing down, I don't want to enter on a push down. Honestly, I'm just looking for buys. So if price is pushing down, I'm gonna wait for price to stop and give me a reason to push, give me a reason to enter for a push up. And I tried to catch a falling knife a few times with the push down, trying to predict it, but I can't predict anything. I have to see what's happening and react off of it. I gotta trade what I see and not what I feel. But yeah, that's basically it for this week. I mean, I think we might see a push down even more. If we do see a push down off of this area, I probably would look for sells. Because this is a very strong market structure telling me price is pushing down. If we see a fulfillment of this tap, another tap, and then a push down, back of this trend line retest, I'm gonna sell to this area here. Because at that point, I mean, price has just broken structure. Like, price has created way stronger market structure right for now than for bearish than for bullish. So we'd be seeing way stronger bearish market structure at that time. Yeah, I look at the 1 hour. I mean, if we see a push up though, I mean, that's wraps. Like, if price pushes up above this is, I don't know where price would stop. We just reach higher and higher highs. The weekly, I mean, this gives no indication that price is going to stop anytime soon. No strong wick, just pure momentum. Yeah, pure momentum for the last 1, 2, 3, 4, 5, 6, 7. We haven't had this a bearish week in 7 weeks. 2 months of price straight going up. So I don't know when it would stop. I'm not gonna predict it. Pretty sure we're in Q4 now. It's October. We're in Q4, so we'll see how that plays out. But this last quarter was just filled with straight upwards momentum. Well, somewhat upwards. Yeah, this last quarter was filled with straight upwards. Wait. Let's see. Yeah. A little bit of consolidation, but overall straight upwards momentum. Once we see price start consolidating, I mean, not gonna really look to trade gold. I'm not trading any other pairs like DA. I mean, you look at this, it's just kind of sloppy. Yeah, it's moving one direction most of the time, but it's not as volatile as structurally fast as gold. Like gold moves really fast and it's structured, you know. But if once you get the hang of gold, you'll master it. A lot of gold has to do with knowing when not to trade. Like you're gonna get trades with gold 100%, but when knowing when not to trade is really the main thing with gold. Like that's the main thing you gotta master, knowing when not to trade. Like with GA, of course you could get trades. See this Fibonacci right here, boom boom, consolidate or hesitating here with this with wicks at this area. This area lines up with the Fibonacci -27 right here, and so do this area over here. Like, I mean, it's easy to trade, but it takes a lot of time to get there. You know, for AU, I like AU better. AU's not too shabby in my opinion, but I mean, I just don't like the patience that's needed for these. I just like gold better. I don't know what to say. I just like gold better. I just don't like those charts are harder to read for me for some reason. Like gold is just easier to read for me because it moves faster, it moves more fluent, you know. But yeah, I like gold better. But for the next week, I don't know what's gonna happen. I don't know. I couldn't tell you. Go look at. See what's happening for the next week. Tomorrow's the 5th, so it's Monday. We got some bills coming out. Not a lot of red things. The 10th is Friday, so I mean we got stuff coming out. We do got stuff coming out. I do want to read most of these things to understand what it actually means. So yeah, but I mean, I don't know what's gonna happen. I just have to react based off the market. If I see a strong rejection here and a retest, I'm gonna enter there. We're already seeing a lower high being placed here. You know, price got here, try to push up, slap down, wants to push up again, slap down, wants to push up again, still gonna slap down. We see a moving average crossover here, but push down. You could enter like right here, boom, boom. Let's hold this trade down to here. And just watch price. If you see price get here and just push all the way up, could exit or just move your stop loss to break even or profit. You know, just being wary of what price is doing. So unless I see this, I mean, this is the only reason I'd get into a sell if price like does this. But honestly, we might see price just slap down back to the 38.75 and then continue to push up. And give us a little Fibonacci here, you know.
38.2, maybe the 50, then we continue pushing up. Negative 27, negative 61.8, you know, but yeah, that's really all I'm looking for gold. Not really trading anything else, honestly. But yeah, that's basically it.